All right, post-Fed, during the press conference, there's two things to conflate. And you look at it as two circles. One's fundamental, and the other has to do with chart fundamentals, order flow, and anticipating what the market's going to do. When I say the market, not just the market's price, market participants, what are they going to do? When you get a highly popular area of, in this case, support, because it's below where the market is, 48, because it's a what's called volume point of control by profilers, not just as a place where the market could go, but stop and rally. It's a destination and it's support. It's not just that, though. It's the context that it's worked a few times as support, similar to here, but even before that moment, it bounced above it a couple times and rallied away from it. So you get people that see that this level exists, they see that it's worked, and most people, this is what you got to understand about traders. Most traders, first of all, don't know what they're doing, and secondly, most of them think that when they see something work, a price level work, that it's going to work again. And that's ultimately the confirmation that it's good support. So it's the 48 sticking out, great support. They don't get filled buying it and getting long because it didn't quite get through there. So when the fourth time it gets through there or to there, I had said to everybody, watch all these blanks get long. Then the second circle of fundamentals, you had an FOMC press conference, and he reiterated that it's very premature to think about pausing rate hikes. Well, you have to understand where the market is, how it's going to react to what they want to hear and what they are hearing. They wanted to hear a little bit more dovish commentary from the Fed to indicate that there'll be less hikes, they slow the pace of the rate hikes in subsequent meetings. The next meeting's in December. They were hoping maybe for 50, lock it in. They kind of got a little bit of that. That comment goes in the face of slowing the pace of rate hikes. Premature to think about pausing rate hikes. Reiterates we have a ways to go. That's bearish. It doesn't mean you have to get short, or you're going to be able to get short right here when it starts to break. But you have to know that there's probably some follow through. And then you add getting all these knuckleheads long in there. And after you're long, you're a seller. And then they just wear it. And so let's play it. And you'll see the comment taking a little bit of an effect, the downside, and then watching all these guys get long. You just imagine them getting long. You see some green popping out. They never see the light of day. Stays at or below 48. Then a big buy iceberg comes in, and watch how quickly they push him out of the way. Boom. It's like this big guy is gonna add to the fight, and someone hits him and he falls down. And so they just take this thing down further and further. You see some buy inventory here at 40 and some more here at 36.5. Move them out of the way. What's on the other side of the mountain? Nothing. And so they just step on this thing and really give them no chance to get out.